Hello, everybody. Jackson here for the Wealth Squad today, talking about Amazon. Amazon fell 14% today. One of the worst days, actually the worst day since 2006. So we're going to be looking into Amazon if you should be buying the dip or not. That is what we're going to answer today. First off, let's just look at the impact of this drop in one day. So we can see here was trading at 2,900 or so, now at 20 under 2,500. Um, on the year chart, it's the lowest it's ever been. 5-year chart, you can see obviously not, but since a couple months after COVID, it actually is since June of 2020 or so is when all of the gains since June of 2020 have been wiped away. Something to remind yourself of. So we're gonna scroll back here. Obviously, Amazon's been on a tear since it went public back in even before the tech crash in 1999 and 2000. It went public back in 1997. You can see here, for pennies compared to what it is now. Um, you can see the RSI is pointing down, not in a good way. As for sure, we can check out the log chart and see the swing that we are witnessing, of course, back when the stock market crashed with the tech crash and boom. Um, it went from 92 to $5 or $6, down 90% or more. And here we're just seeing, 34%. So nothing compared to what we have seen in the past before many of us were investing, but still something to note, this drop here. So let's take a logarithmic out of it and we could better look at how Amazon is doing. Not too good. Why is it not doing too good? Well, we have a unsatisfactory earnings report. You can see here they have lost money this quarter, and they're supposed to make $8.35 per share of income. They lost $7.56 per share, and revenue came in basically the same. So it's just a earnings problem, and we're going to be witnessing that a little bit more with higher inflation and higher costs and stuff like that in other stocks. And we have seen that already, but Amazon's one of the biggest victims we've seen. So let's look into FinViz. We can actually see the numbers here, not the earnings numbers, the actual stats of Amazon. So you can see down 34% from the 52-week high. All the earnings are supposed to be growing. EPS next year $64. That's the year, not just the quarters, obviously. And then we have a 4P of still a steep 34, 35. And of course, cash per share 177, not too much. And then book per share 271. They had $470 billion in sales with $33 billion in income, making their profit margin not too good. So you can see right here, 7%, but operating margins even less than that. But anyways, let's look at the earnings report of why it fell so much, the most since 2006. We have this on Seeking Alpha. Consolidated first quarter sales were largely in line with estimates. Yeah, we saw that. However, the company saw significant incremental cost headwinds due to compounding external internal costs. External front, Amazon faced rising inflationary pressures during the first quarter, so they're blaming inflation and the COVID outbreak across China and lockdowns at its key shipping ports have weighed on already fragile logistic links, causing air and ocean transportation rates to double from pre-pandemic levels. And now they're trying to blame Russia with the invasion of Ukraine. You see the cost of fuel to rise by 1.5 for Amazon during the first quarter, paired with the uptick in wages due to inflation. External cost headwinds dented first quarter margins by $2 billion. And then we can see over here, lower productivity due to overstaffing and excess capacity built from the booming COVID era added another $4 billion in incremental damage to margins, bringing the total bill to $6 billion in the first quarter in charges that they weren't looking for. As a result, operating income fell 59% from the prior year. to 3.7 billion, falling short of expectations of 5.3, as the harsh reality of a evolving inflationary environment and normalizing consumer demand continues to weigh on Amazon's top and bottom line. Management is expecting incremental cost pressure of 4 billion in the second quarter, so they're expecting a heavy cost next quarter as well. So it doesn't look too bullish from here. With Amazon's thin margins, inflation is killing the margin in the business. And it seems like Amazon is not necessarily growing. It's at a very mature stage in the business life. So something to note as well. But let me know what you think of Amazon. Right now, I'm holding off. I'm not buying any. I'm seeing a lot better deals in the market besides this Amazon drop. Even though it's the cheapest it's been in 2 years, I'm not exactly rushing to buy, especially with a high PE ratio, low earnings growth, but a growing company nonetheless. So let me know what you think in the comments below. And that's the video. Thank you for watching.